Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, November 14th, 2011 is brought to you by Realtick. Alright, let's get right into the mix today, folks. Taking a look at the charts, we do see a market that is down across the board. Dow down 87, NASDAQ down 19, S&P 500 down about 13. Basically 1% or just shy of 1% on the indexes. I think the most important thing to view today is the fact that the yields in Italy and Spain are on the move to the upside again. And we're seeing this constant pull and tug of war going on with the yields and then how the rest of the world stock market goes. For instance, here in the United States, very clear, as yields rise in Italy and the rest of Europe, you see the markets decline. It's very, very simple. It doesn't take a genius to understand this at all. Bottom line is, yields up, market is floating lower. I did put out a short on the markets on Friday into the close, and that is paying us off very, very nicely. If you want to get in on these live trades, you need to join the Research Center, folks. 7-day free trial to the Research Center will give you all that you need to know, getting the live calls emailed to you, or alerts on your cell phone, whatever you want, via the hot charts and alerts, which is part of the Research Center. And again, there's a 7-day free trial for that. Bottom line is, the markets again opened lower, sold off, in spirit of bearish pattern. Notice that beautiful in spirit of pattern here. Sideways consolidation off the initial gap down and push down. That yields another move down, and then we're actually creating another in spirit of bearish pattern. Notice how the two moving averages came right to a point there, and the markets are down ticking. Now there is one little catalyst, or caveat I should say, to a bear flag here. Yes, you have a beautiful in spirit of bearish pattern that by all means could play out to this target right here, and it very well may, but the one thing you have to be aware of is the volume is unbelievably light. Look at the volume over the last hour and a half of this trading day. It has disintegrated. We've barely done 100 million on the SPY, which is on pace to be the lightest day in volume in literally months. All right, months, if not 6 months or so. So just be aware of that. In light volume, oftentimes the market does not sell off as much as you might expect. You have to err on the side of caution in terms of shorting opportunities when the volume gets to this level down here. All right. All right, a couple other things to go over. One thing I want to just mention is Friday's action. Let me just erase these trend lines. Friday's action did point us in the direction of an in spirit of bullish pattern. For instance, you can clearly see this up move and consolidation all day long on Friday. Now, many people would say, well, that should play out to the upside in terms of the pattern, and that would be actually correct. But one of the beautiful things about the analysis and methodology here at In the Money Stocks is that when you get a failed pattern, it always tells you a further downside. So when you opened lower today and sold off, that was telling you this in spirit of bullish pattern has failed, and a failed move always results in a bigger move in the opposite direction. So it's not just a little bit of a failed move and then it's done. You actually get a bigger move in the opposite direction, which did come to fruition because you had the failed bullish pattern resulting in this down move, and then you got an in spirit of pattern, which obviously with the failed move of the bull tells you you're going to go lower anyways, plus you have the bear flag. That plays out more to the downside. And again, I wouldn't even be surprised over the next couple days if the markets continue to decline. Today is just, again, the afternoon session is a wild card because of the fact that there's no volume in this market, and we all have to be aware of that. All right, so that's what we have going on. Any sort of selling would yield a pivot high right here from Thursday. That would be at a price of 124.90 on the SPY. That's first support. If you get through that level, then you're looking at gap fill. Gap fill will be a major level. That's at 124.30. All right, so again, 124.30 on the SPY. And if we zoom out a little bit here, your next major level would be this white trend line that is sloping up. This white trend line is a mega level. I repeat, this is the level of all levels. If you ask me which level on this chart I care most about, clearly it would be this level. All right, and the reasoning behind it is because this trend line extends all the way back. I mean, look at where this trend line really starts. It probably even starts before here, but going back to the 18th of October, that's where it begins, connecting the pivot lows. And look, low, low, to the lows, and to the lows. This is a major trend line. This trend line will be support, but at the same time, eventually it probably will break. When you get a break of this trend line, the market could see downside very, very quickly. Much sharper, more volume downside. A lot of institutions, a lot of black box trading programs will have this level priced in as a big level, and they'll short it if it gets below there, and you could see the institutions really go hard at this market on a drop if it gets below that point. So again, if there's one level you're following on the charts, that is the level you want to be looking at on a close or short-term basis. analysis. All right, let's go to the dollar. The dollar, obviously, with the market lower, you should expect that the dollar would be higher. That's correct. Again, the dollar closed here on Friday, down quite sharply, and today it's rebounding nicely, although it's trading mostly sideways at this point for the course of the day. Taking a look at gold. With the dollar up, what does it tell us? If the dollar is stronger, generally commodities will be lower. That's the same thing with oil here. But the GLD is down about $1 on the day. Again, you're just seeing a small fade in commodities. USO, if we type in the symbol USO, you can see this is also down, although the USO is off the lows by a decent amount, but still negative on the day. All right, looking at a couple key stocks. With oil down, you should expect that Chevron would be down, as is Exxon and ConocoPhillips and a couple of these other oil players, and that is the case. So Chevron and the rest of them. But the big loser today, folks, the big drop play, the big sector that's taking a hit is pretty obvious considering what's going on in Europe, and that would be, let's take a look here, it's Goldman Sachs and the financials. Financials, again, are always going to be the weakest area when things are not looking as good in Europe. And today, again, those yields are just creeping up a little bit, and that's putting pressure on the U.S. markets. The leader to the downside is always going to be the financials. Why? Because they're the ones that have exposure to the Greece, to the Italian, to the Spanish, all the debt, all those derivatives. These are the ones that have some exposure. So they're always going to be hit a little bit harder. Just like when the market's good and things in Europe look good, the financials will rebound more than the market overall. On the downside, they go down more. Okay? And again, you can clearly see that here. Goldman Sachs is down substantially, down about 2.5%, while the SPY, which is the S&P tracking ETF, is only down 1%. So it's down about 2.5 times what the overall S&P is down. JP Morgan, same general thing, down 91 cents percentage-wise. That's a drop of 2.75%, and you can see it's kind of right at the lows of the day, and that again just shows us that the financials and the banks are the losers here today. The strong plays of the day, you should say, or at least when looking at the charts, I would say the cloud stocks. Amazon, which is now becoming more and more of a cloud stock, is up today about $2.34. VMware is another one, up $2.55. And there's some other ones out there as well. So the cloud stocks specifically are the strongest out there. Some key stocks out there to watch. GMCR getting downgraded today. This stock, again, look at this daily chart on GMCR. Just an ugly, ugly collapse. Again, it's looking intriguing to me around the $40 level, but I'm going to give it time considering the weakness in the market. I'll evaluate it. If I decide to pick up a position in that, I will alert our Research Center subscribers via the hot charts and alerts. And again, remember, folks, take that 7-day free trial. It's a no-brainer. 7-day free trial, no obligation. You cancel before the end, you're not charged. As simple as that. All right, and there's also a 7-day free trial to the intraday stock chat if you want live analysis all day long, live charts all day long, you want live calls and questions live. It's all included there in the intraday stock chat. So we're here for you. We're here to make money. We're doing that again with a couple short positions on the market that we picked up on Friday, and it's all looking good across the board. Take care, guys, and again, we'll see you as part of the loyal members and the elite members here at InTheMoneyStocks.com.